on trading, and today we are going to look at the market maker method. So I was just looking at some of the quotes or quotations that I get online and somewhere. Then there's this one which was interesting, that the meeting of preparation with opportunity generates the offspring we call luck. So when you're saying you're luck, in reality, you just met an opportunity which you were prepared for. So this is also what we are trying to achieve with the BTMM, that there's an opportunity to make money and trade in line with the market maker. And you say, I was lucky that it was also rising. That was not luck. You were prepared and that opportunity came and you grabbed it. So that is what we are just talking about here. That opportunities, when they come, we grab them, but we fail to grab them when we are not prepared. When we are not prepared, then the opportunity comes, it becomes an illusion. So the market maker method, we are saying the market cycle is based on the psychological number 3. So as you know, there are a lot of things that are done at the count of 3. If you are in sports, you know, when you are running, your marks, get ready, then the third is the go signal. Wrestling 1, 2, 3, and you are out and the like. So they play around this psychological number. So it's actually a psychological barrier in human behavior. We think 3 gives confirmation. And so the market makers, they capitalize on that. That people believe at the count of 3, something is being confirmed. And what do? Instead of confirming, they make you go in the wrong direction. So from now onwards, let's focus on that. When we look at the moves that the market maker makes on the price, they always use the third strike or the third number to confirm something that is not correct or that is not true. So in other words, we are saying they give you an impression that the price is moving that way. Then after that, they move away from it. So that's basically what the market maker does. And once we know the psychology that they use against us, we are also able to beat them and trade with them. So in our case, when the market moves 3 steps, we don't expect a 4th move. So it moves 1, 2, 3, it's finished. To us, it's finished. So you realize that when you open the price charts, you can observe these cycles on all time frames. That means if you go to the 15 minutes, so let me just show you what it happens. So it comes like 1, 2, 3, right? Then it consolidates. Then they give you another 1, 2, 3. Then it consolidates. Then it should give you another 1, 2, 3, something like that. So that is what we expect from the market maker. 3 moves. Now, this method, BTMM, when we are now using it, we are saying these moves are not as easy to observe as that looks. Otherwise, everyone would be making money from the market. So what do? The market makers, they try to hide those moves, right? They even delay those moves. So that at the end of the day, it takes experience for you to be able to pick those moves. Otherwise, once you pick those moves, they are done. Once you pick those moves, they are done. So whatever you are doing with BTMM, focus on the cycle. a 3-move cycle. Let's say the price was going like this. Then they go down 1, 2, maybe they delay. They slightly go up, maybe reset, then they move 3. Then like that, if they make another move, then it goes 1, 2. Sometimes they just start chopping around there so that you don't observe the 3rd move. So those are the things which the market maker does in order to hide the what? The moves from us. So what we need is the know-how of how do we enable ourselves to pick the moves and then trade with them. So that is the whole focus of this exercise. Everything else that will follow is okay, it's confirmation and the like, but this method is based on being able to count the moves correctly without any doubts. So I'm saying, even if you go to the 5-minute chart, if you look closely, you find out that they still have those 3 moves. I will demonstrate it on you on a live chart after this slide shows. So what do? The market makers want to induce you to take a position using that cycle. So they make 3 moves, you expect a 4th move, it doesn't come. Already you are in a loss, they go against whatever they've given you. So the 3 unidirectional pushes will be followed by a reversal. That is basically what happens. Although there's a variation whereby they might give you only 2 pushes, then they don't go to the 3rd one. But again, it will be easy for you to observe that, okay, they ended here. And then you see you wait for the new cycle to begin. So they can give you those 2 pushes. So if you look at the M15, 15-minute chart, you see that a day will give you about 3 levels of unidirectional movement. And a week has 3 levels of unidirectional movement that you can observe on the H1 chart. But after each level, there's normally a pullback or a stop point. So they will not move the levels continuously like that. At a certain point, they pull back. So let's say they were moving like this, level number 1. They can move back slowly. Then they go level number 2. Again, they move back slowly. They go to level number 3. Then they might even move back here. So that you, at the end of the day, if you are not focused, you end up losing count of the level. So that is exactly what they want to happen. So our focus now is that when they hide those moves, we should be able to pick them. Or when you see that the chart that you are looking at does not give you very clear moves, you should be able to leave it and move to a better chart. So that is what we will be focusing on, picking those moves so that the market maker doesn't take away our money, so that we don't go into a loss. So that's basically what the market maker method seeks to achieve. Seeks to find the moves. It seeks to find the moves and then capitalize on that. Moves, levels, and you capitalize. That's all you need in order to be successful in this market maker method. Right. So for you to be successful in using this method, 1, do not try to mix any other techniques with this method. So what I'm saying is, if you want to trade BTMM on a certain pair, use BTMM only. Don't try to superimpose some other things that you had in other techniques, because that will definitely not work well for you. So you need to be able to concentrate on the BTMM when you're entering a trade. 2, when you are doing this training, right? I'll tell you when I think you are ready. Do not trade real money. You don't test the waters with both legs, right? So whatever I tell you, just go. Just go to your demo account, do whatever you are testing. Remember, when you are now going to the demo, I'll tell you when I think you can now start testing those things on demo. But if there are things which you think you can test on demo, use 0.01 so that your demo doesn't get blown out. Don't try to gain a lot of money on demo and mislead yourself. So on your demo, use 0.01, right? There's a time when maybe you think you want to see how you can build your demo and the like, you can increase the lot size. But if you are testing anything, right, you want to see if you really observe the levels and you want to enter a trade, use your demo. Right, there are also some exercises which I'll give you usually over the phone, using WhatsApp and the like. Do those exercises so that you'll be able to identify what is happening on the market. Right? Because it will be a bit difficult for you to identify what is happening in the market if you never tried it on your own. So when you practice doing those exercises, you realize that at the end of the day, it will be easy for you to observe what is coming even before it happens. Then when you are now trading, do not make uneducated or emotional decisions. The uneducated part which I'm talking about is that there is no proper methodological approach or technical approach to the trade that you are taking. That is an uneducated decision. Then if you make your rules, okay, let's say you say, I'm not going to make a stop loss of above 23 pips, then don't break those rules. You don't need to blame yourself when things don't go your way. So do not break your own rules, right? So those are some of the things that you should put in mind so that you can successfully trade using the method. So what do we look at? So this is the market chart or the price chart that you see. So what I do sometimes is I tag my days, right? So this was a Monday, beginning of week, Tuesday, Wednesday, Thursday, and Friday. Then this was a Monday, beginning of week, Tuesday, Wednesday, then Thursday and Friday. So those are 2 weeks. And if you look at those 2 weeks, you will see what I'm talking about, right? Though we'll go into details, but let me just show you something. Remember, we said they do their trade moves at the beginning of the week, right? So what does the market maker do here? He comes in from Sunday, right? Then there are some people who, when they see the agent session, they say if it breaks the agent session, it's going up, right? Like what I saw when people use some of those resistance and support levels. So they went up to pick those orders, right? This was the stop hand for Monday. Then after picking those orders, remember these people who put those orders who expect the price to move up there and there. What does the market maker do? It drops the price on Monday. Towards day end, then he comes back to that point, right? Then on Tuesday, he comes in, he repeats the same movement downwards so that someone who saw it moving down on Monday will say, okay, then it's moving again on Tuesday, it's moving down. So someone gets in here, he puts his sell order there. What does the market maker do? He pulls out the price from him. It goes up once, right? He reaches a maximum point, he retraces back. Then into Wednesday, he goes down a bit and then he also moves up again. After a certain movement, he moves down again and then he moves up to the end. So if you look at this, we have the stop band here for the week, right? Then we have the level 1, we have level 2, we have level 3. Now, this is almost a perfect start if you look at it closely, because the levels are very, very clear. But you realize that there are some times when the level is not very clear, but always look for a retracement or a pause in the movement, okay? Let's say this is the movement. It may move like this. Instead of coming back, it can just go like this, right? A pause. Then the next day it goes down, then it moves up like that. Then sometimes it just makes a pause and move again like that. So it's not always that they will give you this pullback, which I'm observing on these charts, that it pulls back perfectly well. Sometimes it doesn't pull back perfectly well. So what do? These are the 3 moves, 1, 2, and 3, that it does in a week. So we call them 3 days of rise. So after 3 days of rise, you should reverse the direction. So it comes back down, then towards the end of the week, it moves just 1 level and then creates this kind of formation. Then it moves up again, create that kind of formation in the line. So when you are doing BTMM now, you enter a trade there, you count 1, you count 2. On the 3rd move, if you see the 3rd move, when it starts to show that it might reverse, you exit. So this will be the overall movement of the week, right? Then when it reverses, these are what we call midweek reversals. You can also catch in on them. You find the reversal there, wait for this day. It should be coming back close to where it started. You see, the week opened here, and normally the market will close somewhere close to that. So they were reversing after those 3 moves, right? Then on Thursday, just moved up, pick up some orders and the like, but the whole cycle has already been finished Monday, Tuesday, and Wednesday, and here they're just coming back to restart the cycle. Then on Friday, it comes back into consolidation like that. Then what happens on Monday? On Monday, it comes in, it rises through, and as you watch this, you'll be saying now the price is going up, you might enter a buy there. What do? They come back. So this is the 4th move of Monday, the stop band of Monday. It goes up. Then after that, the price comes down 1, then it retraces back. So that tells you this one was a level. If you get a retracement, then it starts from here, it goes down, right? It's not quite a level movement as such, right? This one not quite a level movement because it didn't breach the previous one. So this was almost like that's a reset of the level. So it comes back here, it goes up, stop, and then it goes down. So here we can say we have observed 2 levels. Though someone might argue that this one has a level, but for me, a level should always be lower than the previous one. So here you observe 2, then it comes back like that, like a consolidation, then comes down. If you see it moving back again, you exit. It means they've done what? 2 levels, right? Then on this one, then midweek reversal, they gave it only two levels. Then they came back 1 and 2, and they did that. That was the end of the week, so they would come back here, end of week consolidation into that. But if you look again, they open the week here. Normally, they move closer to where they opened. So that is the market maker cycle what they do. But now you realize that these things are not identical on all levels. So what do? We have to be able to check. Okay, let's pause a bit. I have to attend to something, but I'm coming back.